last Friday in April, which means, clear-headed as I am, that next week would be the first week in May. The first week of every month has the largest data load of every month, so we're going to get flash reports next week, beginning Monday, on what happened in April. And the first ones we get are the Institute for Supply Management, which is the old Purchasing Managers Association. And it's a really good snapshot of the economy because they survey their members in the last week of each month. Then next Friday is the Gorilla. First Friday every month we get payrolls, unemployment, wages, hourly earnings. But finishing the week this week, the Fed met on Wednesday and not only didn't do anything but didn't say anything. And most people expected that they would do some sort of table setting for their June meeting for another interest rate hike then, and nothing. In fact, the Fed post-meeting announcement read as though they would just as soon not have met or said anything. The data that came in the last week, every single piece of it came in weaker than expected, forecast, or thought. First quarter GDP barely grew at all, half a percentage point. More important, in the last 3 quarterly GDP numbers, consumer spending has fallen. It's now fallen by 2/3. And the last 3 going on 4 years, the first 90 days of the year have been poor, but have then been replaced by a sudden significant rebound that made it look as though the recovery's moving ahead. Well, April's over. We're going to find out for sure next week. There doesn't appear to be any rebound in evidence. Good news, bad news. The bad news is that the economy really isn't going anywhere. The outside world is just as much a mess as it's been. The good news is that rates stay down. We're sitting here 3.75, depending on the deal, and the forecasts for higher rates, the Fed's own insistence that it's going to continue to raise the overnight cost of money, all of that for the time being is just a mirage. So take the good news. Have a good weekend.